Hey, Sag Nation, what's going on? Happy Tuesday to you all. I hope everyone had a wonderful day today. I'm coming at you with a market overview going into tomorrow. So for 426, 2023, this is what I'm looking at. Again, this is for educational purposes, not financial advice. So use it as you will. Today was a crazy day in the market, right? We had a tremendous drop and the bears showed up, and every time that the bulls tried to push, they just got rejected and pushed right back down, with the exception of after hours. And we'll talk a little bit about that at the end of the video with Google's and Microsoft earnings, right? Anyway, look, so what you see on your screen right now is SPY on the daily. This is a lot of stuff on the screen, and I know that today's current candle action you can't see because it's covered by a lot of lines. But that is how I draw my charts, and we're not really fixated on so-called the daily time frame in terms of looking at it, where we want to drill down a little bit more. But anyway, look, let's just quickly point some things out. So, as you can see here already, we have this rising wedge pattern that we started, somewhere in, late February into March. That's when we started it. So you can see we came up, tapped it, rejected, came down. Today we actually broke out of it. You really can't see it. I'm gonna try to move it, but you can see the line was right around here. We broke out of it, and look, we actually stopped at the 34 EMA. Today was a massive two down day on the daily time frame, but we will talk about that a little bit later because that changes it based on what we see when we drill down to a small time frame. A couple of things to note right now is that we did draw this downward trend line from back in August's high. We tapped it again in February, and we broke out here in mid-April, like last week. But what I want you to note is that, yeah, we broke out. And technically, you could say that was a false breakout. We broke out, came back, retested, came back in. So, just different ways to look at the charts, everybody. Just wanted to give you different perspective. A couple of things to note. I'm going to remove all this stuff again so you can see it a little better. This teal line is the 50-day moving average, and this yellow line is the 200-day moving average. So we are getting close to that. Let's just say if we do have another leg down tomorrow, or at the end of the week, we got to watch out for the 425 and then potentially the 395 area for a possible rejection off the 50 and 200-day moving average. Another thing I want to point to your attention is, the MACD. A lot of you guys and girls like to use the MACD. We already crossed the MACD pretty much last, Friday, Thursday. We started touching, we officially crossed yesterday is when we actually started downward and crossing, and today is the confirmation that we crossed. So just keep that in mind. I did want to kind of scroll back real quick and point some things out. Last time we crossed it, we were in February 10th. But what you can see is that we were in the clouds. We rejected off 21, and then we came back before we made the leg down. Again, same thing back in December. We literally had the cross. We touched the 34 and then we chopped here, and then we consolidated for a couple of days, and then we ran up, and then we made a big drop. The other time we did that was August high, right around August high, right? So you can see we crossed, and we're on 19th or 22nd of August. We consolidated a little bit, we went up, and then we did make the massive drop. So just telling you to look out for that, because look, I can tell you right now, um, excuse me, based on Microsoft and Google's earning, we're already going to be up. The daily will show that we closed at 406.8, but that is not true when we drill down to a smaller time frame. But anyway, so let's do that now. One last thing, we do have those patterns. We do potentially have, we can say maybe we even have, we can say, let's just draw this out for you so you can see it. We can even say we have a potential cup and handle, right? Here's your cup, and here's your handle. Potentially maybe bounce, and then test that 415 again. It all really depends on how it reacts to the earnings for Microsoft and Google, and obviously for Meta tomorrow, and then Amazon Thursday. So just a train of thought. Okay, now let's drill down to a smaller time frame so you can see all this fun stuff here. So there we go. So when I drill down to a smaller time frame, you can see things and it looks a little bit cleaner, and all the lines may still look a little bit incessive and whatnot, but it is what it is, and that's how I trade. But anyway, so this is what I really wanted to point out right here. So we closed at, technically on the daily. If you go on daily time frame, you'll see that SPY closed at 406 point something. But in after hours, we made this massive $2 run, right? I think this actually hit 409, 405.96, it looks like. And then it ran all the way up to about 408.34. So a $2 run. So right now, SPY is going to be sitting around 407, 407.9 to 408. And really, it's going to be depending on what futures does tonight. So if futures moves up, we can potentially see this up. So right now, the daily setup for SPY going into tomorrow is actually going to be a 2-2 up reversal. But we will see. It needs to maintain. We want to see this get above the 408.59. If we get above that, then we have a great chance of making a 2-up day. If we fail to get above this, then we may consolidate. Again, remember, we did make a pretty big move, right? We went from 411.16 up here down to 406.02, right? That's about a 5-point move. Pretty big move today. So, we have this, downward, pattern right now. We are in a wedge. You can see it's from here and here. So let's see if it, bursts through this downward trend line right now. Again, I'd be looking at this 408.59. I did mark off supplies, which is at 409.61 to about 410.4. Demand at 405.96 to 407.44. And another demand zone at 401 to 41.76 to about 404.35. And we do have a gap. Actually, let me just put the gap here so you can see it, visually see it easier. So I mark all these off like this just so that's easier for you all to see as opposed to me saying it in case you miss it. You can just visually see it. I do have the high, the low, the 50%. And I did mark off areas that I am going to be personally looking at for, key levels to, depending on the market structure, either go short or long, right? I have key levels I'm looking at for short entries, 409.2, 410.6, 410.14, 411.45. And long entries I'm looking at, if we are in a market trend, bullish trend, I'm looking at 407.98, 407.12, 406.9, etc. Right? We do have what we need to look out for is this, weekly high or weekly 50%. So just a lot of things to kind of look at, but this is what I'm looking at for tomorrow. Again, I would look for the bulls to try to capitalize on the fact that Google and Microsoft had fantastic earnings to see if they can get that up and above, right? So what they really want is to at least get above 408.59. So I did one. So that's what I'm looking at. That's what you have. So just mark these levels off if you want, but that's what I do. I would say that a lot of people that did that in the past have found great success and utility out of this. But let's go back to the daily chart. I want to go to Google. So this is Google. You can see that I broke out of this downward trend line, inverted hammer on the daily, and we also have, this potential inverse head and shoulders pattern, if you want to say that. But this is on the daily. Now, if we go to, let's say, the 1 hour, it changes it, right? So the 1 hour, we ran up, hit the, the neckline and closed it. So it's actually kind of flat right now. It's at 105.7. So if you go to the daily, it's at 103.8. So just something to keep in mind. Now let's go to Microsoft. Same thing. Microsoft, we have this inverted head and shoulders pattern. Or you can say this is the shoulder, this is the head, and it's formed shoulder. It really is subjective depending on you, but inverted hammer candlestick. Broke out of this wedge that we have, but it is still in a larger rising wedge. 50-day moving average at around 270.77, and then 200-day at 255.25. But here's the point, right? So if we go down to small time frame, you can see that Microsoft just crushed it. I mean, look at it right here. Um, you know, estimated revenue was 51 billion. They made 52.8, and then the reported earnings, beat it by about 10%. So it was good. You can see that it closed at, let's go back to the daily. Closed at 275.42, and then if we go to the 1 hour, you can see that it's at 298.86. So like a 23-point rise. So it broke above this neckline. We are overextended. I'd be looking for Microsoft to do a pullback, maybe back to the 290s, 288s, maintain that, and then continue up. If it does, that's going to pull up SPY. So just something to keep in mind. Again, we have Apple's earnings, but that is what I'm looking at for tomorrow. Anyway, thank you again for taking time to listen, and enjoy and good luck. I'll talk to you later. Bye.